They say the market rewards discipline, but what if the same rule that made you rich becomes the very reason you lose it all? I still remember the first time I read Jesse Livermore's trading journals. The ink was dry, but the lessons bled with life. He wasn't just another speculator chasing prices. He was a man who lived and died by a single philosophy: follow your rules even when they hurt. It was this principle that built his empire and eventually tore it apart. Livermore believed every market move was psychological, a mirror reflecting human fear and greed, and he mastered that mirror. In the roaring 1920s, when ticker tapes rolled like rivers of gold, Jesse turned small stakes into millions. He'd ride the trend, not fight it, never argue with the tape. That was his golden rule. He'd say, "The market is never wrong, opinions often are." But the same discipline that made him a legend would one day become a trap, a cage built from his own beliefs. Because when your rules stop serving you, they start controlling you. Think about it. Have you ever held onto a strategy so long that it became your identity? That's what happened to Jesse. He became too perfect in his system, too rigid to see when the tides had changed. And in markets, tides don't warn you before they turn. He made millions by following his rules religiously, but when the world shifted, those rules became chains. What began as a philosophy of control ended as a lesson in surrender. The question we must ask is, where's the line between discipline and delusion, between mastery and obsession? What do you think? Can discipline ever become dangerous? Comment your thoughts below. Because to understand how Livermore's strength became his downfall, we first need to explore the paradox every trader faces: the battle between control and chaos. Every trader dreams of control, but in the market, control is an illusion wrapped in numbers and noise. When I think about Jesse Livermore's journey, I don't see charts or prices. I see a man fighting his own mind. The market wasn't his enemy, his thoughts were, because at its core, trading isn't about predicting prices, it's about managing chaos, your own chaos. Livermore understood that early. He knew that price action was nothing more than the emotional pulse of the crowd: fear, greed, hope, and despair woven into a line that moved up and down like a heartbeat. Yet even he, the boy plunger, couldn't escape the paradox. The more he tried to control the market through rules, the more the market reminded him that it couldn't be controlled. He'd often say, "The game taught me the game," meaning, no matter how much experience you think you have, the market always finds a new way to humble you. You can't master it, you can only align with it for a while. This is the trader's inner conflict. Discipline gives you structure, but flexibility gives you survival. Too much of either, and you're finished. The same control that protects your capital can suffocate your instinct, and that instinct, when refined, is often what separates great traders from the rest. So Livermore stood between two forces: the order he built through his rules and the chaos of the market that refused to obey them. It's a balance every trader must find, but few do, because most of us don't trade markets, we trade our emotions in disguise. In those moments when the ticker tape turned red, Livermore wasn't just losing money, he was losing certainty. And when a man like that loses certainty, every decision becomes a test of faith. Have you ever followed a plan so tightly that it blinded you to what was actually happening? Share your experience in the comments. Because the next phase in Livermore's story exposes the most dangerous psychological trap of all, the one that convinces you your rules will always protect you. Every trader needs rules to survive, but when those rules become sacred, they stop serving you and start destroying you. There's a moment in every trader's life when confidence turns into conviction, and conviction hardens into belief. For Jesse Livermore, that moment came quietly, not with a market crash or a bad trade, but with success. Because success, ironically, is what blinds us the most. He had made millions, not once, but several times. Each fortune built on the same foundation: patience, timing, and unwavering discipline. His rule was simple: never argue with the market, ride the trend until it bends. And for years, it worked like divine law. But here's the paradox: when something works too well, we stop questioning it. Livermore began to see his rules not as tools, but as truth. He stopped adapting. The man who once studied every nuance of human emotion began to trust only the system he'd created. He forgot that the market isn't a machine, it's a living organism, breathing with human irrationality. So when the Great Depression hit, Livermore initially thrived shorting stocks, predicting collapse when others were blinded by optimism. But when the rebound came, fast and furious, he hesitated. His rules told him to stay short. His instincts whispered otherwise. And that whisper, that quiet contradiction between rule and intuition, became his undoing. It's the same trap modern traders fall into today. Algorithms, backtests, strategies, they make us feel safe. But safety in markets is a mirage. The moment you think you've figured it out, the game changes. And if you can't change with it, you're already losing. Livermore's downfall didn't start with a loss. It started the moment he stopped listening, not to the market, but to himself. Have you ever ignored your instinct because your system said otherwise? Tell me about that moment below. I'm curious how it ended for you. Because the truth is, Livermore wasn't ignorant. He knew the market had changed, but what he did next revealed the darker side of genius, pride. Genius can predict the market, but pride refuses to admit when it's wrong. By the early 1930s, Jesse Livermore wasn't just a trader, he was the trader. Newspapers called him the Great Bear of Wall Street. He shorted the 1929 crash so perfectly that even the titans of finance whispered his name with respect and fear. But inside, something had shifted. The man who once thrived on observation had become a prisoner of certainty. From Livermore's own writings, you can feel his inner voice wrestling with itself. He still believed in his rule, follow the trend, never the tips. Yet after years of winning, his rule wasn't a guide anymore, it was an ego shield. Every decision became proof of his brilliance. Every contradiction from the market was seen as temporary, not transformational. He'd sit alone in his office, watching the ticker symbols roll by, prices flickering like signals from another world. When they defied his logic, he'd wait. When they warned him, he'd rationalize, because to change his mind meant to admit he was human. And Jesse Livermore didn't believe in being human anymore. He once said, "It was never my thinking that made the big money for me. It always was my sitting." But that quote, often glorified by traders today, was misunderstood even by him. Sitting meant patience, not stubbornness. It meant waiting for the right signal, not ignoring every sign that your belief might be broken. From his perspective, he wasn't wrong, just early. The deadliest mindset a trader can have. Early is just another word for wrong when the market doesn't care about your timing. And yet behind that pride was fear, the fear of losing not just money, but identity. When your name is your success, failure feels like death. What would you do if the market started punishing the very rule that made you rich? Would you change it or defend it? Comment your answer below. Because what happened next was more than a loss, it was a reckoning, a real-world test of whether genius could survive humility. In the market, the moment you stop adapting, the market starts teaching, and its lessons are never cheap. It was late 1931, the Great Depression had hollowed out Wall Street. The same floor that once roared with ticker chatter now echoed with silence. Panic had turned into exhaustion. Fortunes had vanished overnight, and Jesse Livermore, the man who once predicted it all, stood at another crossroads. He'd made his fortune shorting the crash of 1929. While others drowned in despair, he'd built wealth beyond imagination, close to $100 million, an unfathomable amount for the time. But when the dust settled, Livermore did what every confident trader does: he looked for the next big move. The market began to recover slightly, a few green shoots among the rubble, but Livermore didn't believe in them. His rules said, never fight the main trend, and in his eyes, the main trend was still down. So he doubled down, shorted again, harder, deeper. Conviction turned into commitment. But this time, the market didn't bend. It fought back. Stocks rallied, slow at first, then violently. Prices soared as relief washed over traders hungry for hope. And for the first time in years, Livermore's rule, the one that had made him millions, betrayed him. He refused to cut losses. He couldn't, because cutting losses meant admitting the market had changed, that his golden principle was no longer gold. Each day the ticker mocked him, numbers climbing, positions bleeding. Yet he sat in silence, watching, believing that the market had to return to his side. It never did. By the time he accepted the truth, it was too late. His capital was fractured, his confidence shattered. The master of market psychology had fallen into his own trap, the illusion of infallibility. If your most trusted rule suddenly stopped working, would you break it or stay loyal to it? Drop your honest answer in the comments. Because every trader faces a breaking point, that moment when numbers stop hurting and the silence begins to scream. For Livermore, that moment came next, and it changed everything. There's a moment in every trader's life when the numbers don't just haunt your portfolio, they haunt your soul. After losing nearly everything, Jesse Livermore retreated into himself. It wasn't just money he'd lost. It was certainty, identity, and the illusion of control that had defined him for decades. The markets, once his playground, had become a battlefield where every price tick felt like a judgment. He wrote in his journals about nights filled with sleeplessness, staring at the ceiling, questioning not just his positions, but his very existence. Imagine being a man whose intuition and discipline had made him a legend, only to discover that the world doesn't owe you anything, that the market doesn't reward pride, only adaptability. Livermore's emotional low point wasn't a single trade, it was the accumulation of victories turning into vulnerability. He realized that the very rule that had brought him millions, never argue with the market, had morphed into rigidity. It had blinded him. And when a mind like his is forced to face the consequences of its own stubbornness, despair becomes a teacher. He later said, "It's not the losses that hurt, it's the failure to recognize what the market is telling you." That insight was bitter, but it was also profound, because in that emotional abyss, a new kind of clarity began to form, the clarity that would eventually guide him back to relevance, if not to the same fortune. For modern traders, this is the crucible, the point at which ego and fear collide. You can have all the systems, backtests, and strategies in the world, but if you can't survive your own emotions, the market will eat you alive. Have you ever hit a point where your trading losses felt personal, not just financial? How did you cope? Share your story below. Because from this low point emerged one of Livermore's most important breakthroughs, a lesson that could save modern traders from the same fate. The market doesn't care about your pride, your plans, or your rules. It only respects adaptability. After the emotional collapse, Jesse Livermore didn't abandon the market. He rebuilt his philosophy from the ashes. The lesson was clear. A rule is only as valuable as your willingness to bend it when reality demands. He realized that the market isn't static, and neither can a trader be. Livermore's breakthrough was deceptively simple. Listen to the market, not to yourself. He began to differentiate between rules that guide and rules that blind. Patience, timing, and observation remained his tools, but they became instruments of flexibility rather than rigid doctrine. He understood that surviving the market requires humility, not hubris. He wrote about watching trends form, observing the behavior of other traders, and then letting the market confirm his decisions rather than forcing his beliefs onto it. Losses were no longer personal failures, they were signals, and profits were no longer trophies, they were evidence that he was aligned, even temporarily, with the pulse of the crowd. Modern traders often glorify strategy or system, but Livermore's insight was deeper. Systems fail, markets evolve, and emotions are unavoidable. The breakthrough is knowing when to trust instinct, when to follow rules, and when to step back entirely. Adaptability, he discovered, is the most profitable skill of all. And there's a deeper truth here. The same psychological traps that ruined him are still alive today: overconfidence, rigidity, and emotional attachment. Recognizing them is the first step toward mastery, because markets are not about being right, they are about surviving, growing, and evolving with them. Have you ever adjusted a rule mid-trade because the market demanded it? What happened? Comment below, your experience matters. Because understanding Livermore's breakthrough is one thing, applying it in today's fast-paced, algorithm-driven markets is another. Let's explore how his lesson translates to modern trading. The stock ticker might have changed, algorithms might dominate, but human psychology hasn't, and neither has Livermore's wisdom. Today's markets are faster, louder, and more complex than anything Jesse Livermore faced. High-frequency trading, social media-driven volatility, and global macro shocks can turn profits into losses in minutes. Yet, beneath all the noise, the core principles remain the same. Patterns of fear, greed, and herd behavior continue to shape prices just as they did a century ago. Livermore's greatest gift to modern traders is his psychological blueprint. His insistence on observation over opinion, patience over impulse, and adaptability over rigidity is more relevant than ever. Many traders today follow rigid strategies without context. A backtested plan that worked for months or years suddenly fails and panic sets in. They forget the first rule: listen to the market, not yourself. Applying Livermore today means watching market behavior before committing. It means respecting trends but remaining flexible enough to admit when the market has shifted. It's understanding that your rulebook is a guide, not a law. A modern trader must balance technical analysis with intuition, trend following with risk management, and ambition with humility. Consider a trader staring at a stock that's surging due to hype on social media. The instinct might scream buy, but Livermore teaches us to pause, observe, confirm, and let the market validate your decision. Conversely, during sharp sell-offs, panic can mask opportunity. Rules alone won't tell you the answer, your interpretation of the market's signals will. His philosophy also reminds us that losses aren't shameful, they're feedback. If a trade fails, it's not a moral failure, it's data. Adjust, adapt, and prepare for the next opportunity. The same principle that saved Livermore from complete ruin in his later years can protect traders today from catastrophic losses. Which part of Livermore's philosophy could save your trading today? Let me know in the comments. I want to see your thoughts. Because understanding theory isn't enough. To survive and thrive like Livermore, you need a practical, step-by-step approach, a way to implement these lessons in real trading. Wisdom without action is wasted. Here, how to turn Livermore's lessons into a real trading strategy you can follow today. If you want to trade like Jesse Livermore, it's not about memorizing quotes or glorifying past victories. It's about building a disciplined, flexible, and psychologically resilient approach. Here's a step-by-step method based on his philosophy. Step 1. Observe before acting. Start by watching the market, not trading immediately. Livermore spent hours studying price movements and tape reading. Today, it could be candlestick patterns, volume, or trend signals. The key is patience. Don't act until the market gives confirmation. Step 2. Follow the trend. Never fight the market. If the trend is up, consider long positions. If it's down, consider shorts. But here's the nuance. Trends can shift quickly and rigid rules can trap you. Always verify that the trend aligns with current data and market sentiment. Step 3. Risk management. Livermore was a master at cutting losses. Define your risk before entering a trade. Stop-loss orders are modern equivalents of his principle. Don't let small mistakes snowball into catastrophic losses. Step 4. Flexibility over rigidity. Rules are guides, not commandments. If the market signals a shift, adjust. Livermore learned this the hard way. His downfall came when he refused to adapt. Today, staying mentally flexible is just as critical. Step 5. Emotional discipline. Monitor your emotions like you monitor positions. Fear and greed are invisible forces that influence every decision. Take breaks, reflect, and don't let impulses dictate trades. Journaling your thoughts can help emulate Livermore's self-awareness. Step 6. Review and adapt. End every day by analyzing trades. What worked? What didn't? What did the market teach you? This iterative learning is how Livermore continually evolved his strategy and avoided repeated mistakes. By combining observation, trend following, risk control, flexibility, and emotional awareness, you're not just copying Livermore, You're internalizing a mindset designed to survive markets, not just conquer them. Which step will you implement first in your trading? Comment below. Let's build a community of adaptive traders. Because now we need to close the story where it truly matters, the human lesson beyond the millions, the losses, and the charts. Jesse Livermore made millions, lost millions, and yet his story isn't about money, it's about mastery over self. As the ticker tapes roll into history, what remains isn't the exact dollar figures Livermore earned or lost. It's the story of a man who stared into the heart of human emotion and tried to impose order on chaos, and in doing so, taught us lessons no chart or algorithm ever could. Livermore's life reminds us that the greatest market isn't the one with numbers, candlesticks, or futures. It's the market inside ourselves. Fear, pride, patience, and discipline are the true trades we make every day. Every decision, every hesitation, every leap of faith mirrors the psychological battles he faced. And like him, modern traders are not merely speculating on price. They're navigating their own emotions, biases, and blind spots. He made millions by understanding patterns, both in markets and human behavior. He lost millions by failing to recognize the limits of his own rules and the weight of pride. But the enduring lesson is not failure itself, it's adaptability. Livermore learned, eventually, that survival in trading is a balance of observation, patience, humility, and courage. For you, the takeaway is clear. Treat rules as guides, losses as lessons, and the market as a teacher, not an enemy. Discipline can make you rich. Stubbornness can break you. Awareness can keep you alive. Ignorance will destroy you. And above all, remember that no fortune justifies losing yourself in the process. If you could ask Jesse Livermore one question about trading or life, what would it be? Drop it in the comments. Let's reflect together. So when the next ticker flashes green or red, remember, it's not the numbers that define success. It's how you respond, how you learn, and how you grow. The market will test you, humiliate you, and reward you in turns. But mastery comes not from wealth alone, it comes from understanding yourself. Millions can be made and lost, but the lessons of the mind, the heart, and the psyche are what endure if you're willing to listen.